Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your Stock Mentor, Brian Johnson, and a huge run we've seen since about the middle of March here. Well, beginning of March, right around that 7th time frame, we saw a really nice pullback taking up just a couple of days here by the bears, and then a swift launch to the upside. Now, it did look for a while like this thing might roll over, actually put in a head and shoulders pattern. Then there was news about the bank tests and them all passing the stress tests, and it was absolutely, I'm sure you guys remember this, straight up. It looked like capitulation here as it just absolutely drove its way to the upside. Since that time, we've had a couple of decent moves. And overall, though, kind of wandering around sideways, still waiting to see if we're about to complete this next move up. Now, it is boy, I'll tell you what, it's been tough. The last few weeks, I'd say even few months, it's been, we're close. We're really, really close. And we are really close to a more major pullback. I kind of thought this was it when we saw this right down in here. I kind of thought that was it. We were about to kind of roll over, maybe see another little move down. Was expecting this to be like an A wave, then a B up to here, then a C back down here, and then take off. As it turns out, I think this might have just been all part of this larger move to the upside. So, with that being said, I do believe we're still nearing or right at, and I mean right at, the top of the move where the next bigger pullback. I'm going to call it a pullback right now. I don't want to say it's going to be some major drop into the depths of the earth, but I'm going to say the next major drop is coming. I would expect, best guess at this point, to see us come into tomorrow, which is Friday, and still see some bullish remnants. We just crossed 1400 on the SPX today. And I'm really sold on all this is trying to do at this point is change market sentiment. So let me say this really quick. I'm going to move on to the daily. If you're looking for anything to do tomorrow to the upside, you're looking for breaks up and above. I don't know. I've really kind of been working on every 50 points here on the Dow, 200, 250, 300, 350. So as it breaks those levels, you might want to sneak in. I wouldn't hold anything long over the weekend though, especially from an indice standpoint. A stock standpoint, maybe, especially if it's something like Apple or whatever, which I still think is really, really overbought right at this point. Now that we've hit 600, I really do think that it is time for that thing to kind of slow down a little bit too. But anyway, as it is, watching this into tomorrow, don't hold anything long over the weekend. I really wouldn't recommend that. Just be very, very cautious. Use your best risk management at this point. Keep in mind that as extended as we are, you can always get back in on Monday morning, and you probably won't even miss a beat. If we see any gaps to the upside, I'd be very surprised if they're not exhaustion gaps, where it gaps up and then eventually, or within short order, runs right back down again. I think we'll start to see a lot of those if we do see any gaps up. Now, from a daily perspective, I'm really looking for the change in market sentiment. Huge volume on these last few days. Obviously, the interest is still there by the bulls. There hasn't been any interest at all on selling anything here since this big bounce took place right here at this at the March 5th, 7th level. Straight up since then. So very, very tired up here. Things are really starting to slow down. My best guess into tomorrow is we will maybe, if we even see a gap down tomorrow, that we'll cover that area pretty quick, probably grind our way up into the close or near to the close. But I would expect this. By the end of the day, I would expect us to close above the 1400 mark on the SPX, 13,000 on the Dow, 2,700 or so on the NASDAQ. And even on the Russells, make a new high if you guys follow the Russells. So above the 835 to 840 mark on the Russells by the end of tomorrow. All weekend long, just as it did last weekend. Go back and look. Maybe it was a couple weekends ago. But when the Dow started to break the 13,000 mark, it was all about, oh, euphoria. We're breaking 13,000. Wow, this is amazing. Oh, we're off to new highs. The economy's awesome. And unemployment's fantastic. And we're about to turn things around here. And now it's going to get even worse if we see that tomorrow. Now all weekend long, oh, SPX above 1,400 first time in 3-4 years, whatever it is. You mark my words. Watch for those headlines. They'll be littering all of the financial blogs. I shouldn't say the financial blogs. Let's say the major financial papers will be on and on about this stuff. You'll see it on all the news programs, and it'll give people a sense of security, of confidence, of, I think it's time that we start really pouring money back into the market again because we haven't for a while, or we've had money on the sidelines. It's time to get back in. That's what the big dogs are looking for. They're looking for that change in sentiment. That'll be about the time that they bury people in a lot of really bad trades. So everybody that's getting in now to the long side, not from a day trader's perspective or even a short-term swing trader's perspective, but anybody jumping into the markets at this point for a longer-term investment standpoint, they're too late. They're way too late, and they're going to get buried. So I would expect to see it. I really, my gut is that we'll see it early next week, but I would think within the next 2 weeks. I'll give myself some room there, and I'll say within the next 2 weeks we will start to see a drop in the markets, and it'll start to kind of, I don't know if it'll actually qualm for the most part the bullish sentiment, but it'll start to kind of bring it back down from a feverish pitch to just a slight fever, if you will. So there's my take on the markets. I'll blow through these charts. There's not a whole lot to work off of, except we're straight up, basically parabolic, into extremely overbought areas. This is also this is a great illustration of how you can't rely just on indicators to tell you when to trade, whether it's short or long or whatever the case might be. You can't rely on them solely because they can continue to absolutely drag themselves upwards and onwards, regardless of what divergences you might find or anything. So you got to follow what the markets are giving us here. I do believe, though, once again, very, very extended here. So here we are, extending up into these higher levels. Good volume coming in, especially on the last 3 days, especially after the bank tests. Like I said, look for this to maybe be a little bit, maybe even sideways, put in some sort of a lonely kind of doji up here, maybe even a slight push to the upside. To finish off Friday, make it nice and happy, happy, joy, joy into the weekend. That would be my best guess at this point, even though we are this extended. If we start to get back below 13.1, 13,000 tomorrow, well, that would be a pretty major move, actually. To drop 250 points tomorrow would be major. So I'm not necessarily expecting that to happen. So just watch for that slow, methodical movement. Fridays typically work this way. You get good movement in the first couple hours, and then it slows down to a dribble the rest of the day. And if you try to trade, most of the time you get your hand slapped. If you make any money in the morning, by the afternoon, if you try to trade through the middle of the day and into the close, you give it all back. It's very difficult to trade, so you have to be very cautious after those first couple hours of the day are done on a Friday. Just watch that very closely. Let's just go ahead and move on here to the NDX. You can see it consolidating up here. Any pushes to the upside, go ahead and you can continue to go long. There's no problem with that, but be out by the end of the day, and you better be able to manage it and watch it very closely. I'll have to do some stuff with these lines. This line here worked very well, but is of no consequence now. Absolutely just straight up since we started that spring back in this area. So consolidation still looks bullish up here. Sitting up here today with a little doji. I'm not going to worry about that as some sort of reversal doji, though. I really don't care what that is. Overall, I don't think it has any indication of where we're going to go tomorrow. We have to wait for confirmation, but straight up as it is right now. And the weekly, hold on. First of all, look at this run since mid-December. Just, it's just absolutely on steroids right now. And it's very clear on this next chart, the weekly. Look at this. From the middle of December, I've been telling my subscribers for a while now that we're seeing levels here that haven't been hit for bullish sentiment, for just lots of little different things. There's a lot of little things that are going on within the markets right now that are hitting extremes that we haven't seen since 2007. 2007. That's a long time. So we all know what happened coming into 2008. Now, whether that'll repeat itself, I don't know. I don't want to get into all that conspiracy stuff right now, but I will bring to your attention that a lot of what we're seeing is very reminiscent of what we saw just about 4 or 5 years ago. And of course, we know the devastation that followed that. So just telling you to be cautious on through here. Look at these weeklies straight up. SPX, same thing. Had this line in for I don't know how long now. This probably goes back, I think this line actually, guys, goes back to right around that middle of December. And you can see how it just keeps playing its part. We got a long ways away from it. I thought, well, we won't see that line anymore. And lo and behold, the market said, yeah, we will. Brought it right back up again. Absolutely parabolic at this point, straight up here. So still fighting with this blue line. Now the blue line is going to win, whether it's tomorrow or whether it's next week or the following week. I don't know, but it is absolutely going to win here in the bigger overall picture. So just keep that in mind. However, drops back below 1380, that needs to be your first area of this could be the pullback. Okay, so that's a more conservative place for sure, but 1385 to 1380 is where the more conservative traders need to be watching for the beginning of that more major pullback back below those levels. Otherwise, like I said, breaking 1400 today, total euphoria in the markets right now. Nobody thinks the market's ever going to go down again, for the most part. Except for the contrarians, of course. But at this point, nobody thinks it's going to go down. It'll catch a lot of people by surprise if it starts to accelerate. Here it is on a daily, straight up. Same story. I thought we might get another doji today, but it was straight up and into these higher levels, up another 8 points today, just a 0.5%. It's just, like I said, relentless action by the bulls today. So lots of action going on up here, both bullish and bearish, but the bulls continue to put the slapping on the bears up here. Very, very, very overextended. One of the indicators for me was the VIX. See this 1399 print that hasn't been seen since mid 2007, June July timeframe. We haven't been that low on the VIX. We've been close. We've been down into the low 14s and stuff, but we haven't hit 14 or sub 14 since the mid 2007 timeframe. Now we've crawled back up. This is interesting to know too, and this is what happens in a strong market. The VIX moves back up. See this? And the market moved back up. It's like, yeah, I don't care. Markets could care less. The VIX is working its way back up, and all it's doing is really resetting itself for what could be another plunge to the downside here. But as it stands right now, this VIX is not confirming what we're seeing in the markets. The VIX continues to move up. The markets continue to move up. A lot of people will tell you that's a big dire warning. Oh, hey, look at this. 2 standard deviations out of the blah, 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 whatever they go on and on about with the VIX. But the truth of the matter is, if the VIX is moving up and the market's moving up, there is a divergence there, but I got to hand it to the bulls. They've done nothing but they don't care. They don't care what the VIX does. That doesn't make any difference to them. So watch for the markets to move up again tomorrow, and potentially the VIX to drop off into nowhere, and then you're right back to square one, where oh hey look, there's confirmation. The VIX is falling, the markets are rising, and that's exactly what you would expect. The inverse is usually true. As the VIX rises, the markets drop, but that isn't. The markets don't care right now. There's too much strength behind them right now. So watch the VIX carefully. I really won't get too excited about this till we get back above the 20 mark and stay there on a consistent basis. Look at the weekly. Starts with a gap down, digs itself into the 14 area. Here you can go back about 2 years here, and you can see that we've hit 1427. That's the print back here in April of 2011. We haven't even been into the 14s since that time. So this print here of 14, this print here in the 14s is the only, 2 or 3 prints we have in the 14s for the last couple years, and that's on this chart here. So you can see the extreme measures we're at. Now, back here in 11, we were coming off a major drop, so this makes sense to see a huge climb in the markets followed by a big drop in the VIX. The VIX was down in the 9 and 10 ranges back in 2006, 2007, but I would just, beg to say that the economy was different back then. Yes, we were setting up for the housing bubble, but it wasn't here yet. Everybody was getting loans. If you had a pulse, you could buy a house. So it wasn't a big deal. The banks were in trouble, but then it hadn't been brought to light necessarily at that point. So the VIX was really, really low there. We're not in any kind of shape like that right now. The banks are still begging for bailouts. The countries all over the world are still struggling to find money. Everybody seems to know it's just a matter of time before everything starts to fall apart. The unemployment rate is not 3% or 4%. It's still 8%, and it continues to remain there. we're just not in the same situation we were 2006, 2007. So don't get sold on that. This whole VIX printing low tells me that it's time to go long the VIX. That's what that tells me. So that's what I'm doing. Okay, so FAS, this is the financials here, and you can see the scream to the upside. If you guys want to try to jump in over 108, like I said, feel free to do that. Just watch yourself very, very carefully. 100 was a huge level for this thing to break, and you can see once we broke it, retested it, and took off from there, that what you're looking for now is another drop. If we get back below 100, which is quite a ways away, but if you want to play more conservatively, you want to wait for a break of 100 on the FAS before you start doing anything. Below 105 or 104, okay, you can dabble in it if you want to. Back above 108, you can dabble long in it, but look at how extended we are right here. I really would just tell you to use a lot of caution. If you want me to Elliott wave for you, I just think it's 1, 2, 3. This looks like a triangle 4 with a 5 yet to come. Maybe it's even 1, 2, 3, 4, and working on 5 of 5 of up. I don't even want to guess at it, to be quite honest. Just know that up above 108 from a technical analysis standpoint is probably your entry to the long side if you want to dabble in it, but you're going to have to manage it, and I would suggest you be out by the end of the day. Here's that huge run here. Remember how we held the 200 and held it? And then we kind of held it, and then one more time we kind of, I don't know, we held it, and then we just absolutely springboarded from there. The 200, once we got up and over it, was a huge level of support for the FAS. So if we ever get back down into that level again, look for it to be huge support for it on the way back down as well. But all kinds of ground to cover before then. If we can even get back to the 20, now we've got something to talk about. So we'll wait until those levels are reached. Could, like I said, take a little while to see some of that actually happen because the markets have been so bullish, especially on the financials lately. With that being said, I need to wipe these lines out. FAZ just fallen into the depths of the earth here from 27 all the way down to 21 and over the matter of just a couple of weeks. It looks like it still wants to push itself even further to the downside, getting in and below that 21 mark. Certainly would kind of precipitate that, I think. So once again, if you want to go short, that's great. Below 21, got to be cautious. Your long isn't until we get back above 2250 in the FAZ. So I made a little bit of money on this little bounce here, but was lucky to have even made anything at all with the major drops we've seen. Financials seem to be making a huge run. Love what I'm seeing here as well for a level of support. If this thing will hold, this blue line will hold. It can be tweaked ever so slightly. It's not my favorite line, but if it'll hold right here, this is a really good level of support down here for the FAZ. We might see it kind of drag itself down, maybe even get below it before it runs back above it. But this is your like I said, I think this has room to actually run a little bit lower. As much as I want to call this a bottom or call this, I just can't do it. It's bearish. It is what it is, and the chart is bearish. So back below 21, something to really be watching as well. Takes us to the end of the video. A little longer than normal, but I wanted to make sure I got with you guys since I only do it about once a week, and I wanted to make sure I covered a few things with you coming into the new week. It's very, very important that you keep this in mind. So far, so good for the bulls. That time is going to run out, and when it does, I want to be in. So if there's something you want to do now, you want to start building a short position, that's great. Go ahead and start to build yourself a short position, but don't dive both feet in. I would take it very, very slow and kind of, slowly work yourself into the short side. If you're not already into the short side, I'd recommend that you do try to maybe sneak yourself into the short side. The reason being is because you don't want to miss the move. I mean, let's say we come back Monday morning and we're down 30 points. I don't know why that would happen, but if you just want to be in. You want to make sure you have at least a little bit of a short position on, so you don't miss the drop. So keep that in mind. Start building that now. If I'm not back with you over the weekend, I'll definitely be back with you next week. If you enjoy the videos, this is exactly what I do for my subscribers. It's $1 a day, 28 bucks a month, super cheap. Super cheap. We cover all kinds of things in the subscribers video. I have the trading room. I have the mentoring services. If you're struggling in your trading and you just can't seem to find your footing and you're tired of being up 600 bucks and then all of a sudden you're down 800 and then you're up 300 and then you're down 500 and you just can't seem to find ground, the mentoring class can really, really, really help you. If you're one of those people that wants to learn how to fish instead of being given a fish all the time, that's precisely the course you need. Write me an email, talk to me about it. Let's discuss if it's right for you. But if you're willing to, it's going to take a little time, takes a little effort, as everything else does. I would be remiss if I sat here and told you it was easy to trade. For anybody that spent any time trading, you know it's not easy. It is difficult work. But I can make it a lot more simple for you. If you just know what to look for and why you're going long and why you're going short, life can be a whole lot easier for you. So don't get caught in the rut. Give me an email, send me an email. Let's talk about it and see if it's right for you. If you, I also have a managed fund program going on. If you have extra funds, talk to me about that. I can manage those funds for you. Um, where I take just a small fee for doing the work and you get the profits. So talk to me about that as well. Sometimes you just don't have the time. You're busy, you got a full-time job, but you do have funds laying around the house that either A, aren't making you any money, or B, you don't want to manage them yourself. You don't think you're doing a good job of managing them yourself. Let somebody else that does it for a living do it for you. That's me. Talk to me about that. So lots of products on the docket here at thestockmentor.com. Send me an email. We'll talk more about it, and we'll get back to you guys at a later date. Talk to you later. Bye.